Alright, welcome back. We're coming to you live from Region Echo Niner Zulu 71 FEMA 7 longitude 27 degrees latitude 17. Oh man, what a wild world we live in. Alright guys, welcome back. It's been a while. So the markets have been just crashing this week. If only someone would have warned everyone, right? Anyways, first of all, not financial advice. Consult your licensed financial advisor. I'm not a licensed financial advisor. I could be completely wrong. I have no idea what I'm talking about. These are just my opinions. And this is more of an educational channel, entertainment. I give you guys my opinions and theories of what's going on in the economy and the world as a whole. And we learn how to trade, right? Consult your licensed financial advisor before doing anything. Stocks, extremely risky, extremely volatile, especially right now. And do not invest anything you're not willing to lose or risk. That's about it. I don't know, if you have stops in place, you might get stopped out because it's really volatile, right? So it's wicking up and down everything. Some things are a few things are rallying, a lot of things are crashing. All right, so I'm going to talk about just in general what I think is going on, and we'll look at some news, and then I'll look at some TA and price charts, see where this market's going. Overall, it's a shit show. It really is. And yeah. So there's good news, there's bad news, there's good news, there's more bad news. I feel like 2020 has already been a year because there's just so much information, so much going on, and it's a wild ride. I told you guys 2020 is gonna be wild. Not this wild, but it's wild. Alright, let's just scroll through some things on Tyler Durden's page here. Listen, the burn, he definitely got, the burn. He would have won if the DNC wasn't owned and, if it's not completely corrupted. Obviously, they're not counting votes. In my opinion, I could be wrong. Biden, I wouldn't worry about him. If you've seen some of the videos on Twitter of him, I mean, it's it's, for one, it's disgusting. Two, he's out of his mind. They all are, but he's like, his age is actually, he's losing it. So, unless his running partner is the burn, that's probably his only chance. But even with all of everything going on, right, with Trump probably going to get the blame for for whatever happens, right? He's going to get it anyways. Even with all this, he's probably still going to come out on top unless his health goes. Not saying that, I'm just saying he's old, right? And they're still running around. I'm sure he would get the best attention. I don't worry about it. But you never know. You got to think of every possible scenario in this case. Italy is on the brink. Well, their hospitals are on the brink of collapsing. It's bad. It's over 10,000 confirmed, and they seem to have a stronger strain of this because it mutates, right? I told you guys it's gonna mutate. Mainstream is gonna just blame the current administration. We're officially in a bear market. Dow fell about 1,500 points today. So in the private group, I make videos for them more to keep them up to date. And between making them videos, actually trading, prepping, and running around doing other things, and I even have another business, I mean, I'm pretty overloaded here. My hands are pretty full. So that's why I haven't been making as many videos on my YouTube channel for free. So Dow fell another 1,500 today. Yesterday I had a huge bounce. Like it went up like 1,000 points or something. I called it for the private group. I said, listen, it's a dead cat bounce. Actually, no, I think I even made a video about that. I don't know. I don't remember. Like every day seems like a week now. So we're officially in the bear market. It fell from the all-time high. The Dow's fallen 20%. Once it's 20%, it's official bear market. Like it's recession time. All right, so everyone knows now. No one could say, oh, there'll be a V bottom reversal. There won't. Not just that. I mean, this, what should I call it? I don't want to call it V.OV. Or, what if I, anyways. Oh, I had a good name for it. Let's call it the, forgot. Whatever. We'll just call it C.OV because I forgot. I had a good name for it. Darn it. Anyways, and you guys know if I say this, like my channel gets nuked by the powers to be, the information gatekeepers. Oh, by the way, Wikipedia changed the last, I can't even say that. I put in the newsroom. Screw it. The last pandemic, right? The influenza, right? They changed it around so it doesn't sound and look as bad. Because it used to say, over 50 million to 100 million estimated, something like that, and they changed it around so it doesn't look like that. Why? Like, why? So, I mean, who are they to change history? And we're going to see more of this as we go on. But honestly, I mean, through competition and the fact that these companies' stock shares are not crashing, the gatekeepers of information and censorship are just going to lose a lot of power and credibility, and alternatives are going to pop up. The free market will win. It's just, it's a battle, and it's going to take a long time. All right. So the repo market, what was it, 130 billion today, something like that, 70 billion yesterday. I mean, it's basically QE in the background running, and not QE, of course. But I mean, that's what they're doing. They're printing money and just giving overnight loans to the banks so they don't blow up, because the financials, the bank stocks, and the ETFs, they've fallen like 40% from the all-time high. They were hit the hardest. I should have shorted financials. I didn't. Mainly because they tend to wake up whenever they announce QE. Because, like last time, people are expecting bailouts. But, of course, they won't call them bailouts. Trump just promised to bail out cruise liners and shale and all of this. Those are bailouts, guys. They called it something else, some sort of packages, relief package, whatever. They're getting bailed out by pretty much the central bank, which is the public, the taxpayer. It's not even taxpayer, because tax money can't cover any of it, because there's not enough. There's a deficit, right, for tax that's being collected for the budget of what they spend. So it's basically everything that gets bailed out is just money printed out of thin air. And then the public still pays for it through inflation, right? Because your savings and the money you make is worth less with time. and that's a form of tax, stealth tax. All right. So bases in the sandbox, right? U.S. bases. The empire is obviously on decline now. It's because it's moving out of the sandbox region, and that's just another evidence of decline of the empire. You know, it spreads out, puts bases all across the world, and then has to start pulling them back because it's running out of resources, money, and those regions start fighting back and pushing them out. And then this viral situation, let's just say that. It's easier for me to say than C.ov, whatever. This viral situation is speeding that up. Now, here's the thing, guys. I have some inside intel. I'm not going to say what it is. But let's just say that this viral thing, it's definitely sliced and diced and put together. It's man-made. And just from... let's speculate. Now, in the newsroom, in the chat groups, I've been posting videos for months now coming out of China. And one thing, this is all speculation, but they were, in a way, prepared. Remember the snowblower, 5-ton vehicles driving around the cities, just spewing out some sort of bleach or something, chemical? I mean, they had to have made those prior. Or, I mean, for them to make those within weeks of the breakout, I think is slim to none. And, you know, all the people walking around with the backpacks and the blowers and all the suits. I mean, there was probably tens of thousands of these people in the major cities of China just disinfecting everything and cleaning it out. And they did a pretty good job of that. Because as of now, they're reporting that they have 0 cases. It's not spreading anymore. It's probably lies, but pretty much they have put a lid on it. And it was through draconian measures, right? I mean, people are getting welded into their buildings. Dump trucks just putting up roadblocks like overnight. And what I'm trying to say is, it looked like they weren't prepared, but they kind of were. Like, it happened quick. Within 1 week, everything was locked down, and there was just vehicles driving around, just blowing chemicals into the air. Like I said, they had to have made those weeks prior, if not months. What I'm kind of hinting at, you know, there was a trade war prior to all this, and the U.S. was winning it. And China was losing, and China's way, way over leveraged. More so than the U.S. when it comes to banking and their housing bubble and everything. Like, their economy was imploding already. So, wink, wink, think about it. We have been in a state of war, economically. Well, would they, I have to be careful. Would they take a hit themselves so it doesn't look like it was on purpose, and be prepared for it, right? And then knowingly know it's gonna go out into the world and hit their competitor or their enemy. It's a theory, right? Could be possible. Also, the WHO, right? Today, they finally said it's a pandemic. Okay. Why? I mean, it was pretty obvious a month ago. It was obvious, like, when I first started talking about this, what was it? January, 18th, right? It was obvious at that point. I'm like, okay, well, you guys have to warn everyone and do your job. And they didn't. They played it down. They were more worried about China not looking bad and all the other, SJW stuff. And they've been buddy because you have to follow the money. Who funds them? Who's been giving them a lot of money, right? So I'm throwing it out there, and let's just leave it at that. So, things might escalate later on in the world. And I said this historically, when one empire is weakening and another one is rising, they're gonna, historically, they always go to war. And China looks like the aggressor to me, because they've gutted the U.S., right, of their industrialness, of their industrial manufacturing. Now, the U.S. sort of did it to itself as well, right? Well, let's just say the elite in the U.S. and politicians kind of let it happen, because who knows, backdoor deals, right? And that's just that, high regulations and taxes in the U.S. It makes sense to go there. And a lot of internationals did go there because, well, there's like 1.4 billion people that are rising up into the middle class. So they sold out the U.S. and a lot of money flows went into there. And on the back of the U.S., China was built. All right. Earnings expectations starting to plunge. I don't know how you couldn't have seen that coming. Earnings expectations for mining stocks should be exploding. I'll talk about that later. Even though I know they've been getting hit hard, and it's very it's annoying. Nobody said it was going to be easy. What else was going on? Robobank historical comparisons. Yeah, I mean, historically, guys, 19, the Great Depression, World Wars, they always start after stuff like this happens, this viral situation. Everything's being canceled. Every convention, everything. People aren't going, they're not traveling. They've canceled all their plans. Businesses, you name it. The convention about this viral situation was canceled because of the viral situation. I posted in the newsroom, my Twitter. It's pretty funny. So it's all about the response in the U.S. Listen, it's like walking. It's like walking on a tightrope, right? If you do a huge quarantine, martial laws, right, and just lock everything down like China did, that'll crater. I mean, the U.S. stock market and the economy is already cratering, but that will really, really just blow everything up. And that's the problem. Now, I have my personal theory and solution on how to do this. Now, obviously, if it would have been up to me and I was in charge, I mean, I would have been ahead of the ball like week one of this breaking out, and would have started educating the public and started warning the public, hey, and I would have shut off the planes. But since none of that has happened, and it still hasn't, which is absolutely insane. It's insanity. I mean, at some level, I mean, Trump's a little bit responsible for not shutting off the planes to even Europe now at this point. Like, shut off the travel. Anyways, at this point, this thing is gonna definitely hit everyone, right? It's eventually gonna go through the most of the human population, and then once everyone gets infected, it'll burn out. It'll burn itself out. Because once everyone's built up herd immunity, right, it stops jumping from person to person, right? The community spread. But the problem is you have to have that happen, but slowly, so your healthcare system doesn't get overwhelmed and collapses. Because if that collapses, that's when a lot of people lose their lives. So, I mean, the way I would do it is you have to educate the public. And everyone has to do self-isolation. And PPEs. Just freaking wear the gloves and the masks and the eyewear. Like, it's not that... And I told you guys, look at South Korea and what they are doing, right? Look at South Korea. And they did it right. I mean, they're cleaning everything, disinfecting. There's no like soldiers everywhere in roadblocks. People are just responsible. They've been educated. I mean, of course, they're more used to it than the West. But come on, I mean, the learning curve is not that hard. Just wear masks, no group gatherings, and it'll significantly slow it down. It's that freaking simple. And everything's going to be okay. And you don't have to go through the draconian, soldiers with tanks and not tanks, but, armored vehicles and the roadblocks and all that. I don't want to see that. Nobody wants to see that. That itself might cause a panic. I mean, because, at that point, our freedoms go out the window. And then people might start doing stupid things and panic. You know what I mean? I mean, that's all that needs to be done, honestly, in my opinion, and everything will be all right. Everyone has to work from home who can. People who can't work from home, I mean, you just have to wear PPEs. And I do not know how they can't provide this stuff. Well, yeah, I do. Globalization, right? Because all of our PPEs are made in China, right? Now the U.S. can't make any for itself. It's embarrassing. It's a sign of weakness how we have pretty much outsourced everything and we make absolutely nothing. The U.S. became the strongest economy and empire in the world through being the industrial manufacturer of the world, the Industrial Revolution, back in the early 1900s and late 1800s. Well, now we're the opposite of that, and now we're seeing the consequences. And it's just rise and fall of empires. And now, finally, the pin that pricked the bubble. This was more of a, this is more of like a bullet, a large caliber bullet hitting a bubble, pretty much. So, listen, guys, the viral thing, it's definitely manufactured. Was it accidentally released? That's what I don't think. No, I don't think it was accident. It was definitely stolen as well. And there was articles out about that. I put in the newsroom. By the way, links below. For the newsroom, link is below in the description section. Also, mining stocks have pretty much tanked. So the opportunity is still there, I believe. Go to my website. It's still on sale, just not the 60% off. It's at $120. That's the fee to get the report, and then $10 a month for the private group, where I share my trades, all kinds of stuff. We're even talking about like prepping and like what we could do if we get sick. All kinds of cool stuff. Great community, and I share my trades. You can learn how to trade. What else? I don't know. We're doing all kinds of stuff. Where was I? I have no idea. I just lost. Anyways, let's just move along. The bond market is what, that's where everyone's running right now, and that's another reason why metals are probably not, like, exploding higher. But we did test 1700 yesterday. I'll get into metals in a second. So that's funny. Their budget was larger during the last administration. Wait. It's larger now than it was during the last administration. But, this administration is definitely going to get the blame from the media. Yeah, all sporting events. So the normies, who live their lives weekend to weekend, sports ball, who have no idea what goes on in the world because, ignorance is bliss. Now they're getting affected. Also, the JR podcast, Rogan podcast, largest podcast in the world, they talked about the viral situation, and I don't know, he probably gets like 10 million with his podcast, all the radio and all of the different YouTube channels. There's numerous. Jersey, complete lockdown. They actually called the guard out. Of course they would. And those are lefties, right? Using the military. On, Empire. This is how Empire works. Empire expands. And Empire goes out and takes over, right? With soldiers. And then on the collapse, Empire comes back. And they end up on your streets. Now, listen, guys. People in the military, none of them are, most of them are not bad. They're not bad people, right? They're just like you and me, except they have training. I'm one of them. Most of them, great people, guys. It's the leadership, right? But at the end of the day, the number one thing within those types of organizations is you follow orders. If you don't, it's your ass. And better him than me, right? There's a saying. But at the end of the day, you have to follow orders. And I don't, it's when there's high panic, high stress situations is when good people, fight good people. You know what I'm trying to say. But I don't think that's going to happen. I really hope not. Of course, it's in the back of my mind that this viral thing the worst case scenario happens, and then everyone's locked down for months, and then the economy completely just goes, and things get a little wild, right? And then there has to be draconian and law enforcement, and people, you know what I'm saying, get hungry. I don't think it's going to happen. I'm prepared for that, right? To bug out into the woods. But I don't think it's going to come down to that. And my hope is because of the way it's panned out in Japan and South Korea. And I think in the next few weeks, the U.S. is going to do that. So relax. The only thing that's going to suck about it is you're kind of going to get locked up in your home for a little bit. And hopefully it's just for a couple weeks, maybe a month at the most. Because anything longer than a month, Americans are going to freak out. And, and you'll still be able to go to the store. You just have to have equipment, PPEs. And it'll stop. The heat will slow it down. And then somewhat of a return to normal in like June, July, hopefully, and the markets might rebound a little bit because they're going to print trillions of dollars with QE, and they have to announce QE like tomorrow. They're gonna do it soon because the market has already priced in these tax cuts, which are horrible economics. By the way, Trump's a socialist. Hate to break it to you, megatards, but he is. The only way he could get anything done is if he sides with the lefties, and the right keeps moving more left with time. And, I mean, he's printing money endlessly. He's not conserving anything. And, forcing employers and the taxpayer to pay for medical leave, right? What it's going to happen, I understand for during times of emergency. The problem is every time there's an emergency, they pass a law like this, some sort of welfare law, and then they never take it away, ever. That's how we have Social Security and everything else, literally. And it just never goes away. And then what that does is it's more straws that go on the camel's back, and the camel's the free market and the economy for the U.S., or what's left of it. And one day, the last straw is going to break the camel's back. Get it? So all these welfare regulations and it's just drowning all business owners and industry. And then, you can't complain that it leaves the country because it's not business friendly. And that's just the truth. And then everyone suffers and becomes poor. All right, I don't want to make this an hour-long video. Where am I? I'm at 30 minutes. Let's try to keep under 50. Let's be realistic. Yeah, this is today. Let's look at the year. This is the heat map for S&P and what? Oh, this is past 12 months performance. No, let's year to date. So the start of 2020. I mean, there's still plenty of fall, guys. Look at these. 10%, 15. Still a long way to go down. Except for JP Morgan. That's down 31%. Bank of America, wow, 35. Yeah, financials were just hit hard. They're going to have to bail them out again. They're not going to call it a bailout. They could call it something else. Stimulus package. A viral relief package. Look, I mean, plenty way down. The problem is they're going to do QE and it's going to keep the market from falling further. Much further, I mean. All right, let's take a look at the world. I have a stock that's related to Italy and the US, and it's highly indebted, and I forgot to short it today. And I just realized it as I'm doing this video, and I'm really angry with myself. But there's still plenty of downside, I believe, so. Maybe I'll catch it when they announce QE and we get a bounce. And everything bounces back up like, who knows, 10% or something. And then I'll short it again. Alright. Surprised they haven't changed the rules to shorting. The dollar had a nice dead cat bounce. It's back up around 96.48. It's probably going to fall again, especially when they announce QE. So let's take a look at the Dow. Here's the VIX. VIX just shooting higher and higher. So here's the Dow. This is a 4-hour chart of the Dow. So here's the all-time high, right? It almost hit 30,000. Is that right? Yeah. All right. Moving averages, we're getting a bunch of death crosses. So it's not done, right? Falling, according to technical analysis. Of course, technical analysis can't always price it, or it doesn't give you a good indication of manipulation like QE, like printing 10 trillion or something crazy. Where should I, you know what? Let's go to a weekly chart. So, give me a second here. I'm not going to edit this video. No way. I'm putting in a fib retracement from the breakout in 1987 when they took us off the gold standard, started blowing bubbles. I mean, is it going to go back there? No, probably not. If it does, then it's the end of humanity. Let's take it. Yeah, 9,600 on Dow. It's a pretty good breakout. Maybe a little higher. Let's take it a little higher. You know what? It'll overshoot it. It might overshoot it when it crashes. Unless it's Venezuela style, like what happens because they print so much. But for now, let's... so here's a weekly. My blue equilibrium line and the 61.8 fib retracement on the Dow is around 22,000. We already went below the 200-week moving average on the Dow. That is really, really bad. That's very bearish when you cross the 200-week moving average. Now, we've done that in the past, right? And then had a V-bottom reversal back in 2015 and 16. But is it going to happen this time again? Maybe. Well, we're not going to have a reversal and go higher. We might have a V-bottom rebound. So let me draw. If they announce QE, like by the end of this week or next week sometime. And then I expect that to sell off as well later in this year. Maybe beginning of next year. I don't know. The time frame, that's hard. But this is what may happen soon, right? If QE is accepted and it works on the psychology of people in the market, which it might if the right measures are taken, like South Korea, for this viral situation. Like if this viral situation could get taken control of, like in the next month or two, then yeah, we could see a V-bottom rebound with QE. And I'm talking like massive QE, like 4 trillion injection. And they will do that and sacrifice the dollar. The dollar will lose like 10-20% or something. Who knows? Pretty quickly. And but it could still save the market from doing a swan dive to like 38 or 23.6 fib retracement, right? Because you don't want it. Because once it does this, I mean, it's over. The viral thing's the last thing you'll have to worry about if it does this, and it can do that because everything's so over leveraged. So this is what I'm speculating is gonna happen, and also, I mean, that's probably what they're planning and trying to do. Right now, they're just coming out with tax cuts, this and that, and the repo market, and the PPT, and the circuit breakers. All of that is keeping the market from doing the straight down swan dive. But Wall Street cheat sheet bubble chart, which you guys have seen a million times. If you haven't, search it. Just put it in the search engine. It's not that hard. All right. Let's continue. I have a lot of windows to cover here. NASDAQ, S&P, FANG Index, Dow Jones, Russell 2000, Vanguard International. Look, okay, there's one thing that stands out of all of these indices, besides the Russell 2000 tanking more than anything, which is the domestic, smaller, junior caps, companies for the U.S. Domestic market. So the Dow did, go slightly below the 200-week moving average. S&P is still above it, hasn't quite tested the 200-week moving average. That's why I still think there's a little bit more downside. And then the NASDAQ hasn't either. It's actually quite high and above. It hasn't even touched the 100-week moving average, the NASDAQ E-mini. And it needs to for this correction to be over, I believe, which could happen fairly quickly by the end of this week. Now, the one thing that stands out is the FANGs. And I told you guys, because the FANGs are so overweighted in everyone's cookie cutter index fund, the FANG, the big former trillion dollar, loved darling companies like Apple and Microsoft and Amazon and Facebook, Netflix, all that crap. That's how they keep the market up. I feel like someone, I don't know who, is buying the FANG index to prop it up. to prop this damn market up. It's my conspiracy theory. S&P 500. So we've fallen out of this giant channel. You see these purple lines? This is a channel. And when the price action falls out of a channel, then that's significant and very bearish. Because it's been trading in this channel mainly for over a decade. It's fallen outside of the channel a few times. So the channel's not perfect. But when it falls out of the channel, things get a little serious, right? So this is zoomed out. This is a weekly chart of the S&P 500. This is 2009 bottom, financial crisis. And then it's sort of been trading inside of this channel. It tends to overshoot it and then undershoot it, right? So right now it's undershooting it. The question is, can it get back up in the channel? I don't think so. If anything, I think the channel, the bottom portion of this channel on the S&P 500 here, will act as resistance when they come out with QE and create some sort of massive V-bottom rebound. But what I think this V-bottom rebound is going to be. So let's say it falls a little bit lower this week. We test the 200-week moving average. They come out with QE and then V-bottom rebound, and then might get a little bit above it, but then boom. Something like that, right? Now, what does this remind you of? You know what? I'll bring it up again for the people. For the people. All right. Wall Street. Give me a second. One second. All right, here's the Wall Street cheat sheet. This was the all-time high, right? So right now we're somewhere around here. And then they do QE, and then we get that giant bull trap, which could last quite a while. Like, maybe this will happen late June or July, the rebound, and then it'll take us into the end of the year, maybe the beginning of next year. But this giant bull trap that might happen, it'll be sacrificing the dollar. And that entire time, I do expect gold and silver and mining stocks to rally. That is, of course, if this viral situation doesn't end modern civilization, which guys, I know I've been panicking, and I'm kind of mad because I spent a lot of money preparing for the end. But you know what? I don't regret it, because all the food I bought, you know, we're going to get inflation anyways, and it's just good to have. You sleep at night, right? So, although I spent a lot. So, all right. So that's where I think we are at on the cheat sheet. And this is called complacency or something. There's an alternative to the Wall Street cheat sheet that I actually think is even better, but right now I don't want to cover that. All right. All right, let's move along. I don't want to make this too long. Nobody will watch it with their short attention spans. Here's Apple. Had that nice bounce as I expected. Listen, guys, when I put these arrows, I can't put them exactly, but, they're just to give you direction. You don't follow it with time, because you can't, because it'll be too jumbled, right? The picture, I mean, what is it? I can't do that. But pretty much this is played out as I expected for an awesome short opportunity, which I put in for the private members. Here's the $1 trillion fangs, right? Long way to go. And you know what? These may suffer longer than the indices themselves, because their earnings is just going to get destroyed in the next few quarters. So the opportunities are still there to short them. I mean, they still have a long way to go. Like, the problem is, the FANG index is kind of drags them higher despite fundamentals. That's how it's like all manipulated. But, there's still some more downside this week on these until they do QE, and then we'll see if the market buys it. If they do QE and the market barely bounces, or in the viral situation doesn't calm down in the next by the end of May, then yeah, we have way more downside to the market. And if there is way more downside to the market, meaning if we go back to the S&P, like if the market really does fall past my blue line, it could follow my blue line. They could maybe pump it back up. But if it gets past that, which would on the S&P would be around like 2,400, if it gets past that, then there's like no return. Then it's just going straight down. Which again, takes us back to the bubble chart. And then this little bounce that we had this week was it. Or the bounce that we'll have. What I'm trying to say is, if the bounce is very weak when they do the QE, if it's something like this, well, that would be a weak bounce. If it's something like this, then look out below. But I don't think I think they're going to somehow pull it off. Because somehow because people are stupid. The masses. They think return to normal will happen. Most people, if you ask them right now, they're like, yeah, this is pretty bad, but, it'll go away. Which, in a way, the panic will go away, but this viral is going to stay with us. And it might come back stronger next winter. Which is another reason it's a good thing we prepped early, because the prices on the prepper stuff, like these masks, if you look at my camera, right, they're still going to stay high. I mean, this mask right now is going at a 400% premium. I bought this for like $15. Right now, people are selling this for like $60. Anyways, yeah, so here's the Russell 2000. Russell was hit the worst, which is surprising. I didn't think it was going to do that. Peter Schiff was right about that. I'll talk about BTC. When I think about Peter and I think about that, because it's pretty much at war with him. Here, yeah, I mean, we're pretty close to 38.2 fib retracement here on the Russell. Dow transports. So the bellwethers, right? Russell 2000 and the transports. If these two keep falling, and they have fallen a lot. So if these two keep falling, then it's a bellwether, meaning it gives you a little precursor, like a little bit of a warning. I'm talking like you have maybe a few hours, because that's how fast things are moving, to tell you that, or a few days maybe, if the market's going to continue to keep falling. Again, relief rallies will happen, and the Dow transports is on support here at 81.38. So, that's before the close today, I took profits on my major short position that I put on a few weeks back, and I still put on another short, but it was a small position. I might close that tomorrow. It all depends how much, if we keep falling tomorrow. But that's why I took profits, because it's looking like a relief rally needs to come, and they're going to do QE pretty soon. Or they're going to even start talking about it. And that's pretty much enough for the market to start pricing in a huge QE money printing injection into the market. All right, let's talk about BTC real quick. I still expect lower. It's on major support right now. This is a daily chart. I was right about this as well. Okay. So 8,000 has become major resistance. Let me zoom in here. I put in that red arrow like 2 months ago. I still expect it to revisit 6,400. It might they're trying. There's some huge wicks down here. They're trying to save it and then push it back up, but then major resistance again at 9,000. So it might trade sideways. I don't know. Or if it just breaks down here and this is weak, boom, there she goes. If they announce QE, I think it might not go down to 6,400. Either way, I don't think, and like this year, it's going to get back above 10 grand, personally. So I'm not even like really following BTC here. So something like this. And then maybe trade in this range sideways for like a while. A long time. Months. And the problem with crypto is the longer it doesn't moon and make people Lambos, I think the more people become bearish and sell, because the people in this space are used to awesome rallies, this type of price action. But the longer you don't see this type of price action, and the more so you get smaller rallies to the upside, because they're becoming smaller and smaller, right? The rallies to the upside. The more boring it becomes, and the type of people who trade this and invest in this want to get rich quick. Let's just face it, that's true. And it's not, and the longer this doesn't, redo 2017, the more likely I think the price will go lower for a longer period of time. And if you zoom out, I'm being real. I'm a realist. Like, I'm not here to pump anything or anything. That's why a lot of people hate me and flip out in the comments section, and I get a good laugh. But listen, this is turning into a giant fractal. And I've shown this before. Come on. Come on. All right. Boy. There we go. Like, it's turning into a giant triangle. You guys can see that triangle, right? Like something like this. Or like this. So it's a giant fractal. And it's going to take a long time. Till like 2021 or 2022. If it comes back. It might never come back. I don't know. But anyways, on CNBC they were making fun of crypto, which is the number one thing that Peter doesn't understand and nobody wants to talk about. What gives it value is the lack of transparency in the borderless, and they're making fun of it. Why do you need to hide where you send your money? Only criminals do that. That's what they said on CNBC. Well, first of all, it's none of your business. Privacy is a human right. And the reason they want to see everything you do with your wealth and your money is so they could take it. That's the only reason. It's not over public safety. They don't give a shit about that. And everyone knows that. And it's your God-given right to not let the world know what you have, and to be able to transfer it. But that's also a negative for crypto and Bitcoin, because it's a blockchain and everyone can see what you have as soon as you spend it, because you could trace it back. Guys, I know of all the ways that people try to hide it. None of it works. And if let's say it does work today, it doesn't mean that it can't get decoded in the future, because technology advances. So I'm done. Gold and silver. Here's a weekly chart of gold. Am I over an hour? I'm at 55. Let's do this quickly. So on the weekly, it's a bit overextended, it looks like. But again, the bet is QE is going to make it rally and hit new all-time highs, like in the next few weeks and months. That's my bet. Can I be wrong? Absolutely. If I'm wrong, my portfolio is going to take a huge, it's already taken a huge hit, but it's going to take a bigger hit because I'm long a lot of these ETFs and leveraged ETFs for the gold miners. I'm going to talk about that in a second. Why? Anyways, so let's go to the daily. Now the daily still has some support with this green Ishimoku cloud. I did not think it was going to get slammed today down to like 1630. That's absolutely ridiculous. There's no reason for gold to do that because the market was crashing. The only thing I can think of is, I don't know, it's being manipulated, or people are getting margin calls and they're just selling their bullish positions they had in metals, which at this point I almost feel like a lot of those people should be kind of washed out of the market, the speculators. But who knows, right? But the daily, the oscillators, the MACD's already crossed the downside. The RSI's sort of towards becoming oversold, not quite yet. And let's take it to a smaller time frame. Let's get a better look. Well, I mean, this support has to hold. I mean, gold really cannot fall below 1630 again. I really hope it just gets bought up again overnight like it did last night. And last night it went to like 1670. Monday it was up and it tested 1700. These are huge volatile moves. In the 4-hourly time frame, it's extremely overextended to the downside. So I really hope it doesn't revisit the 200 period moving average on the 4-hourly around 1600. I hope it holds up here. And then in anticipation, smart money, us, I bought the dip today, by the way, on the gold mining ETFs because I took profits on my giant short position that made me a ton of gains, and it covered a lot of my losses. But it also, I had a lot of profits left over, and then I bought into mining ETFs, and I bought this dip. And I think it's a great opportunity if you want exposure to the mining stocks and you don't have enough, or you don't have any and you want some for possible life-changing gains. I think this is a great buying opportunity. I don't think they could go much lower. I mean, it makes absolutely no sense that these mining stocks are getting so hit hard. The only thing I could imagine is speculators are getting washed out. It just makes absolutely no freaking sense. Look at this. These are the mining ETFs. They're all hitting major support areas because of previous price action. This one's really holding up well. It's a good one. But look at the rest of these. I mean, this is insane. I put on only trade options if you have like seriously like 6 or more years experience. If you're a professional investor trader, I put on some call options a few months out, so small positions on some of these ETFs, and I went in heavy. Like I bought the dip on all of these, so I'm betting that they're going to do QE soon, and then we're going to see a huge V-bottom reversal on these mining ETFs. I could be wrong though, guys. This viral situation could actually cause so much fear that people are selling absolutely everything, even mining stocks. So that's another reason why they're dumping so hard. And also, this does echo 2008, where when the stock market was crashing, gold and silver and the mining stocks crashed as well. Except it's not. Gold hasn't crashed like it did in 2008. It's pulled back comparison to the giant move it had this year and last year. Guys, if I zoom out, here, let me show you. So this move up in gold, this is gold on the weekly. This is not a crash or correction in gold. It's looks like it's peaking out because, you know, it's gone up pretty parabolic here. But again, QE could send this higher, I believe. That's what I'm betting. Now, if it doesn't, then I'm out. I'm going to sell a lot. And then, you know, buy the dip down here. So let me compare it to 2008. What happened? So here's 2008. It crashed when the market crashed. This is a crash. I think right now we are either right here on gold or we are right here. But I think we're like, maybe we're right here because QE is going to send it to the moon, right? And then it might pull back, but probably not like this. I don't know. We have to take this week by week. I mean, just to show you guys how ridiculous the fact that mining stocks have sold off so much, how ridiculous it is. When, here, let me go back. Give me a second. Yep, I went over an hour. Great. Here's GDXJ Junior, Junior Mining ETF of Junior Mining ETF, a well-known one, right? Like, it's just a well-known one. I'm not saying it's one of the best or anything. Why doesn't it doesn't go back? Okay, let's go look at GDX. All right, it goes back to 2008 and 7, all that. So when gold went to $1,350, GDX went up to $31 a share in 2017. So at the all-time high of the gold bull market until 2012, GDX went up to $67. Right now, I mean, it's about to hit support here, the 200-week moving average. So that's good. That's another... Of course I knew that. I put a... Anyways. So what I'm trying to say is, when gold was at around 1,350, GDXJ was at $31. Gold right now is at 1640. So $1,600 and $1,640, right? Gold. And GDX is at $25. When gold was at 1,350, it was at $31. Let that sink in. It's important. That's how undervalued these mining stocks are. The shares of these ETFs were higher when gold was like 30% less value. The earnings for the next quarters for these mining companies are going to be the best on the entire equity markets, in the entire equity markets. All right. And none of it is priced into their shares, to these mining companies. The fact that gold is so much higher than it was a year ago, or 2 years ago, or 5 years ago, or 7 years ago. Get it? The balance sheets, the debts are going to get paid off. And the fact that oil has crashed because of this oil war is also really, really good for the cost margin on mining stocks because it costs a lot of oil to drill and mine and extract and transport the metals and the in the ground and all that, right? And to, you know, keep the lights on. So what I'm trying to say is the cost of mining is going to drop. What they're mining and selling has exploded in value. Almost it's up like from the all-time low in 2016, it's up 160%. The metal itself from the 2017 low, no, 2018 low. Oh no, this is GDX. What am I doing? I'm not even looking at gold. This is what I was trying to do. Give me a second. Gold is up from its all-time low in 2016. It's up 63%. From its most recent low, swing low on the weekly here, it's up 46%. None of this price action has been really priced into these mining stocks after this major correction. So these mining stocks and their shares are the most undervalued asset in the entire history of like stock markets right now, okay? All right, so I think I'm pretty much done for now, guys. Smash some likes, leave anything in the comment section, anything. And go to my website if you want some exposure, if you want to learn how to trade, you want to be a part of a group. I can't make any promises. Do not invest anything you're not willing to lose. Everything's educational, and yeah, go to my website. It's still, product should pay for itself. No promises. I'm not responsible if you lose money or make money, okay? We're just trying to help each other out and do our best here. All right. Join all the free chat groups. There's the newsroom. There's 2 free chat groups. And then the private group has like, I just added a prepper group to it. So I think it has, there's like 4 chat groups for the no, 5. All right, guys, until next time.